Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you for coming on today.
Good afternoon, Devin.
Well, stocks were up in New York overnight as concerns ease about inflation and the American economy opens back up. It'll soon be summer vacation, of course, in the U.S., so that's giving a boost to parts of the economy that had been shut down. What's the story in the global markets?
U.S. market has been moving ups and downs without clear direction from the beginning of this May. It is related to rising concerns on U.S. inflation and global inflation. But expected inflation is weakened yesterday due to sluggish employment recovery in U.S. Dow Jones Industrial slightly increased by 0.03%, and NASDAQ also increased by 0.6%. As vaccination speeds up in the United States, pro-cyclical stocks like luxury cruise, airlines, and automobile gained in a large scale in the United States.
Indeed, and here in Korea today, stocks were mixed. There's concern that new data from the U.S. on consumer spending will actually show more inflation out there. The KOSPI was a little lower, the KOSDAQ a little higher. What's the story today in the Korean market?
There was a big swing in domestic market today. In the morning session, KOSPI dropped by 0.5%, but KOSPI market recovered due to domestic institutional investors' large purchase in the afternoon session on transportation and health bio stocks. Finally, KOSPI had negative 0.1% return for today. KOSDAQ market gained 0.8% today with pretty unusual foreign investors' aggressive purchase on health bio stocks.
Right, and zooming out a little bit here, Professor, back in the first quarter of this year, Korea's household debt rose to around 1.6 trillion US dollars. And we've seen people borrowing a lot of money to buy homes, but also to invest in stocks and other things. At the same time, there's talk of the Fed tapering its bond buying, and borrowers have to be worried about rising rates. Tell us about all that and how it figures into the debt situation.
I think one of the largest risk factors of Korean economy is household debt, which amounts to 1,765 trillion won as of last month. In these circumstances, for example, if Bank of Korea raises interest rate because of inflation pressure and the U.S. Fed tapering, households sitting on this much huge debt would be much more suffering from interest payment. That decreases domestic consumption and delays economic recovery from pandemic. Since also quite a few stock investors increased credit loans in financing their stock investment, household debt problem can trigger further drops in stock market if Bank of Korea raises interest rates.
Yeah, and speaking of rates, the Bank of Korea today, as expected, decided to keep its benchmark rate where it is at a record low of 0.5%. And we've been here now for a year. What was behind that decision?
Bank of Korea's fixing key interest rate today at 0.5% is kind of 100% expected. So Bank of Korea decided to unchanged is record low interest rate at 0.5% from last year's May, because even with stronger signs of export and economic recovery, since the wave of vaccination, however, at home shows still little signs of slowing down, and since because of the weak consumption recovery, it is highly expected that Bank of Korea may not change its interest rate throughout this year.
And the BOK has also raised its GDP growth forecast for this year to 4%, quite an increase, 1 full percent there. Now, exports, too, are expected to rise, and that's a concern to some because the thinking has been that the BOK would not raise rates until after next year. Do you think it might happen sooner than that?
Well, that is a tough question, Devin. Actually, supported by signs of a robust economic recovery, particularly in export, Bank of Korea raised its economic growth outlook to 4% for this year and 3% for next year, 2022. The Bank of Korea's February's forecast was that Korean economy would grow by only 3% for this year. But as global demand for memory chips and automobile stayed strong, export, which covers about 50% of the Korean GDP, jumped 41% in April from a year earlier. So that means Korean export expanded its gains for a 6 straight months. Bank of Korea also raised its inflation outlook for this year to 1.8% compared to its previous forecast of 1.3%. But as we talked about, Bank of Korea's higher priority is on economic recovery. So it is expected that central bank will leave its key interest rate at 0.5% until the end of this year.
Just like the Fed continues to watch employment and try to get that number back up. Right, Professor, we'll have to leave it there for today. Thank you for sharing your insights with us. We always appreciate it.
Thank you very much.